Welcome to Growth Investing Mastery. Today's video is going to look at Sezzle's Q1 2025 earnings with symbol SEZL. As a reminder, this video is not investment advice or a recommendation to buy Sezzle or any other stocks. Sezzle is a buy now, pay later solution which builds credit for its users. Let's check out the previous guides that Sezzle gave on their past earnings call. They mentioned the only number they target for is full year EPS, which was guided for $13.25. When we adjust for a 6-to-1 split, which happened, it's $2.21 for the new EPS amount. What's interesting is the company also gave revenue guidance for 2025, but that wasn't in the previous transcript, and I'm not sure where they posted that, but we'll talk about that soon. Analysts had estimated revenue would come in at $65 million and adjusted EPS would come in at 20 cents. However, the previous Q4 had $98 million of revenue. That implies that analysts were expecting a huge seasonal drop, or a drop-off going from holiday Q4 to Q1. Let's take a look at what Sezzle actually reported on its Q1 report. They got $104.9 million of revenue, which is up 123% year over year. Additionally, that absolutely crushed the analyst estimate of $65 million. It's nearly $40 million higher, or 50% higher than analysts had expected on revenue. The company gives a GAAP and adjusted EPS, which is the same number, and I believe that just means they don't do any adjustment to their earnings, but they still report both numbers. This EPS came in at $1, and analysts were expecting 20 cents, so the earnings were 5 times as high as analysts thought. And I did double check to make sure that $1 of EPS is adjusted for splits, and the 20 cents is adjusted for splits as well, so it's an apples to apples comparison there, and it's not a mistake of the split happening. So you can see overall the results were much better than anybody was expecting by a wide margin. Let's look at the new guidance Sezzle gave for full year 2025. They guided both GAAP and adjusted net income to $120 million, up from $80.4 million previously. It's almost unprecedented to see a company raise their EPS guidance 50% for the full year like this. Converting those dollar amounts to EPS, it's $2.21 a share, going to $3.25 a share for both GAAP and adjusted EPS. The company is also giving full year revenue guidance of 60 to 65%, and they say this is up from 25% to 30% previously given for full year 2025. I wasn't able to find anywhere they gave that previous 25 to 30% revenue guidance, but they do have it on record here that they gave that previous guidance. Looking at these numbers as a whole, it makes sense why the stock was up over 50% since reporting, as they are upping their guidance massively. Let's look at some of the numbers Sezzle reported on their Q1 report. Gross merchandise volume was $809 million, which is up 64% year over year. Overall customer purchase frequency is 6.1 times, up from 4.5 times a year ago. Revenue made up 13% of GMV, and that's a new record for the company, which is up from 11.5% last Q4. The company had 658,000 mods. However, that is down sequentially from 707,000. They mentioned there's a lot of seasonality in this number, and they expected it to go down. But this is a concern of mine and something to keep an eye on. Operating expense was up 66% year over year, but down as a percentage of revenue. And keeping in mind revenue grew 123%, so an increase of 66% on OPEX isn't that bad. Transaction-related costs were 3.8%, and that's down from 4.3%, where the lower number is better. And there was better credit performance in the quarter, which explains this increased number. Operating income was $49.9 million, which is up 261% year over year, and that beats the previous high of $30.9 million last quarter, And that's really impressive when we consider Q4 was the holiday season as well. Net income was $36.2 million, making up 34% of revenue, and this is over 4x from last year. Let's examine some more numbers that Sezzle delivered in their Q1 of 2025. Adjusted EBITDA was $51.4 million, which is up 244% year over year, and adjusted EBITDA margin was 49%. Cash flow from operations was $58.8 million, and that's up huge from last quarter, which was $38.6 million. The company has $120.9 million of cash and $70.8 million of outstanding principal on the debt they owe. Cash grew $15.7 million quarter over quarter, and they reduced the usage of their line of credit. There was 77% year-over-year growth in mods and subscribers. They said at one point in the call there was a 70.4% margin for our unit economics. I'm not exactly sure what margin they were talking about here, but that metric does sound pretty impressive either way. The company noted they're continuing to outperform the Rule of 40, or with our similar version of Rule of 100. One metric did stand out because of how poor it looked, which was active consumer count. That's up 5.4% year over year. And I am wondering why this metric is so low when every other number is coming in so far ahead of expectations. Let's examine the narrative now for Sezzle's Q1. The WebBank partnership helped to drive revenue growth in the quarter. There's a new product called Pay in 5, which is in beta, and it offers customers greater flexibility on payments. There are new shopping tools, price comparison, wish list, and something called auto coupons. There's also Sezzle Balance, which streamlines paybacks through deposits that users can make. There's also a product called Money IQ, which rewards users through knowledge-based games. The company made 2 enterprise signings in the quarter. The first deal was with a company named Shields, which is in the sporting goods industry. Secondly, they made a deal with a digital market called WOP, or WHOP, and I'm not sure the transcript got that name correctly. The company espoused that buy now, pay later is aligned with responsible payment, and unlike credit cards, you must be current on your payments to continue using the service. Sezzle saw better than expected repayment performance on GMV coming from Q4. And that's a good sign. It means their machine learning models are predicting credit scores well. Additionally, the partnership with WebBank is seeing the full benefit for its first full quarter. Management noted that consumer purchase frequency and repeat usage have risen every quarter since the launch of subscription products in 2022. Let's continue looking at some of the narrative that Sezzle told about their Q1. They started a 50 million share repurchase program. There is a unified fee structure under the WebBank program, and that's helping keep expenses down. There's an optimized transaction processing strategy and a new debt facility. Demand remained strong in Q1, which is usually the softer quarter after Q4. The focus for the sales team is on enterprise-level merchants now, although they do still maintain a mid-sized funnel. There is headway in new categories such as grocery and bills, and that could potentially open up new TAM for the company. The on-demand product is seeing monthly sequential growth right now, which sounds really promising. Management said about on-demand, it's really a winner of a product on that, and there's a low entry barrier for consumers. Ease of mind and ease of use are the 2 best aspects to the product, according to management. The company is looking at ROI for onboarding customers, and they're not just trying to grow volumes just to grow the volume. The company says they're building user trust, and one product they're using is auto-applying coupons, and that makes the customer remember when they get a coupon for free. Let's summarize what we've learned about Sezzle's Q1 2025 earnings report. The results broke all analyst models and estimates. The guidance on the top line and bottom line for 2025 is up nearly 50% after just one quarter of reporting. Somehow, Sezzle managed to grow from Q4 to Q1 in the retail and consumer space, which is incredibly hard to do with the strong holiday season. The Sezzle subscription products are gaining a lot of traction with loyal customers. My biggest concern is if these accelerations can continue, and how many more quarters can they put up where they keep increasing the rate of growth. My current plan is to hold my shares as I increase this position prior to earnings, and I was looking to turn it into a more higher confidence position. With the recent price rise, it's now in that range of being a higher confidence position. I'm really encouraged by the results that Sezzle put up in this quarter, and that concludes the video on Sezzle's latest earnings. As a reminder, this video is not investment advice or recommendations to buy Sezzle or other stocks. If you enjoyed the video, leave me a like or make a comment below. Thank you.